Welcome to our webinar, Managing Overseas Project Payments in a COVID-19 World. This webinar is presented in partnership by ACFID and StoneX, who used to be INTL FCStone. My name is Mark Carpenter. I'm the Director of Business and Corporate Partnerships in ACFID. Some of you may know me as a member of the ACFID Finance Managers community and also the Risk Managers community as well, community of practice. I'd like to begin by acknowledging the traditional custodians, traditional owners of the lands that the ACFID Secretariat is based on, the Ngunnawal people. We extend this to the traditional owners of the lands that we all join from today, and by paying our respects to their elders past, present and emerging. We acknowledge their ongoing connection to the lands, waters and skies surrounding us and the deep wealth of acknowledgement that they have. Next slide, please. Before we get started, we have a few housekeeping announcements. You click on the Q&A to type into your questions. This is also where you can view and upvote the questions submitted by other participants. You will be directed to complete a short feedback survey following this session. That will happen automatically once the presentation is over. Please contact the Secretariat directly following this session if you do not wish for any of your contact details to be shared. Next slide. So you will now see the agenda for today's session on your screens. Today we will hear from each of the presenters. There will be an interactive poll and a Q&A to close. Attendees will also be directed to complete a feedback survey at the end. Next slide. You may recognise either Tiago Vieira, Senior VP at StoneX Global Payments Asia, or the group name from previous ACFID conferences, where INTL FCStone, StoneX now, have been a long-time sponsor of the national conference and supporter of the ACFID membership going right back to 2015. So there's been a fair track record of us working with INTL FCStone and now StoneX. Michael Stupiak, sorry about that, is the Head of Business Development for Global Payments Australia and New Zealand. And they are joined by their colleague, Timothy Pang, Head of Trading APAC at StoneX. As we are now entering in, and we're also now discussing entering into a corporate partnership with StoneX between us and ACFID. So keep an eye out for further training events and learning events under this partnership that may be coming up in the future. Next slide. Now we will move into the first part of the webinar, where Michael will provide an overview of StoneX Global Payments. Over to you, Michael.
Hi, everyone. Thanks, Mark, for that introduction. And it's a pleasure to be here today speaking to you all on behalf of StoneX Group, along with ACFID. As you may tell, I'm actually by that comic there from Melbourne. So have some pity for me for the situation that we're in down here, although I'm sure a few of the people on the call here are as well. It's not that bad. We're going to get through this and do our best together. So my name is Michael Stahoviak, and I am the Head of Business Development Global Payments for Australia and New Zealand here at StoneX Group. And next slide, please. So we're actually going to kick things off with an interactive poll just to get things going a little bit here. So I believe you should now see open up on your screens some questions. And we just want to gauge the room to see how people here have been impacted by the pandemic for your international project funding. Now, it's just one answer. Sorry if there's more. We've tried to make it as flexible as possible. But what we're going to do, we might keep that open for a little while. And we're going to come back to that a little bit later on and sort of discuss those results. I think it might be very interesting to see how people respond here. Now then, should we go to the next slide? Thank you. Now, as Mark has already alluded to, the name has changed. It used to be INTL FCStone for a number of years, but as you can tell, there were too many colors in the logo, so we had to change that. But we've actually changed the name to StoneX Group, which hopefully makes it a little bit easier to remember, but actually pays homage to the history of the organization, which goes back nearly 100 years with one of the very first entities which made up the group, Stone itself. So if you do see the name, that's what it is. It's the same company. Nothing has changed other than that. Next slide, please. So I'll give you a little bit of a background about who StoneX are. So we are a diversified financial services organization, Fortune 500, publicly traded on the NASDAQ in the US. So that's where we're headquartered. Now, we've been trading in Australia, we've been working with clients, ACFID members, for well over a decade. And we hold over more than 30,000 accounts with over 1,600 employees. We've got an office here in Sydney in Australia, whereas my two colleagues who are on the call here are based in our Asia hub in Singapore. The services that we provide range from commercial hedging, global payments, which is a division that I work for and my colleagues, commodities, securities, clearing and execution services. So broad range there. But global payments is the division that we're all here for. Next slide, please. Now, you can see there a map giving you an idea of our coverage, which is extensive. Now, we've been providing this service, global payments, for well over 30 years. A lot of it founded in sub-Saharan Africa, working with local banks in each country that we provide clearing and execution services to. So that is a mixture of FX and payment delivery services into each of these countries. Well over 175 countries in 145 different currencies. We are able to provide this using our correspondent network of over 350 banks. In fact, most of our time is spent managing those relationships, onboarding new banks, vetting them, and working with them to provide optimal clearing and execution services for our clients. We process well over $2 billion in payments per month. That's 24 billion a year. And we have well over 800 clients from the aid and development sector across the globe, a lot of them based in the US, Europe, and the APAC region. Now, one particular interesting point that most people may not be aware of is we actually work with over 55 global banks. In fact, if you look at the top 10 global turnover in FX banks, they each will be working with us in some shape or form to extend their own network of currencies that they offer to their own clients. So we are the, I guess, primary provider for exotic currencies in most locations. And in fact, we even have 2 central banks that we work with and provide those services to give a testament to the trust that is placed in our services. Next slide, please. Here is a snapshot of some of our clients, some notable ones that are worth mentioning up there. UNICEF, we've worked with from the very beginning, over 30 years, long-standing relationship helping them access exotic markets. Bank of America, which is both our client and our house bank, so here in Australia. And also CARE, which we've had a long-standing relationship with, helping them access exotic markets for their global payment needs. Next slide, please. And here's a quick snapshot of all the currencies that we offer. Again, just to reiterate, 145 currencies, 175 countries. Just to give you some perspective, the large banks in Australia will only provide typically up to 40 currencies. We do the full 140 plus. And I think one of the more interesting additions that came on there recently, and we're always onboarding new currencies, Zimbabwe, which has had its ups and downs, has actually come back online. I know it's typically a heavily dollarized currency. However, recently the local currency there, the ZWL, has been making a strong comeback, and we've been monitoring that situation very closely. And we are aware of our current clients and members acting in this region. So if you are interested in finding out more about what's going on there, please speak to us afterwards and we can help. Next slide. That's it for me. Let's get on to the interesting part of the presentation. I'd like to introduce Tiago Vieira, my colleague, who will be taking you through COVID-19 through the international payment lens. Thank you.
Thank you very much, Michael. So just a quick introduction there. My name is Tiago Vieira. I run the global payments product for StoneX in Asia Pacific. I'm based here in Singapore, and so good afternoon to all of you that have taken the time to join us today. It's great to be here with you and a privilege to partner once again with ACFIT for this opportunity. As Mark mentioned early on, a great relationship that we've been building over the last several years that we look forward to growing even stronger very soon. I guess if we could maybe just get the next slide real quick. Thank you. So my focus for this part of the presentation will be specifically on the impact of COVID-19 on the service that we provide to our customers all over the world, and also the impact on the global infrastructure of financial institutions and bank partners that effectively powers our unique ability to make payments, settle foreign exchange transactions in over 175 countries. As my colleague Michael mentioned, these clients range from international NGOs, United Nations agencies, central banks, as well as government development agencies that are entrusting us to be their provider for foreign exchange liquidity and settlement of international payments. Like any international organization whose CFOs, treasurers, or finance managers have to manage overseas exposure, we believe the importance of real-time access to information is paramount to ensure there is continuity in operations, and especially during unprecedented times such as these, that any interruptions can be managed efficiently and as effectively as possible. So our main objective during the last few months has been really to step up and focus on navigating this uncharted territory and using the best of our expertise to continue to provide the high levels of service and support to our customers, as well as listening to their unique needs, which do change and we can learn from and share to other customers as a learning experience of value. By leveraging our proprietary network of local bank partners and central banks around the world, we have successfully kept abreast of the ongoing developments in each of the local markets, and we've been able to centralize this and distribute it electronically to our customers on a real-time basis and also on a daily basis. And we believe that this has been of significant value during a time when organizations have had to deal with the impacts of COVID-19 in parallel to already pre-existing challenges of their existing missions and projects around the world. If we can get the next slide, please. One slide back, actually, sorry. Thank you very much. So the dashboard that you see here is a snapshot that we've compiled with input from Worldometer, from our local partner relationships around the world, and from other sources that are monitoring and reporting on COVID-19 as of July 14th. Across our network, we have seen a range of responses, including very early border-specific lockdowns that were triggered from the initial reporting of numbers out of China. We've seen selective travel restrictions, local curfews, and government-imposed suspension of businesses, as well as a combination of these measures at different times throughout the last several months as countries struggled to contain their infection rates. There have also been cases where governments that eased their measures too soon, like we've seen in South Korea, have had to claw back on some of those measures and impose controls once again that kind of set some uncertainty in the market. We saw in Malawi that an attempt to implement a lockdown by the government was suspended by the High Court, as the government there had not made enough provisions for the country's food supply to compensate for the local market closures in the country. In Tajikistan, whose neighbors Uzbekistan and Kyrgyzstan took swift measures early on, the government was fairly lax in the beginning and soon regretted that to turn around and come back with an outbreak response within a month's time after almost ignoring it for that same period. Vietnam which is a very interesting case with its population of nearly 100 million, implemented their national response at the end of January, based on their previous experience with SARS, and they have reported less than 400 cases. And we're actually among one of the first to ease their domestic containment measures. And today, they're actually considered as the roadmap for a lot of the other developing nations here in the region. What we found in our experience was that in most markets where the government reacted and asked the citizens to stay home, there was notably low impact on the banking systems, and they remained open, allowing us to continue delivery of the payments that we make for our clients into these markets. Next slide, please. So to look at the actual settlement systems and the financial markets of these countries, despite the generally smooth operations in majority of the markets, it is worth noting that several countries did experience some interruptions where governments had to halt trading of their financial systems, including exchanges and banking services, in order to curb volatility and to avoid cash withdrawal panic during the time of uncertainty. Fortunately, these shutdowns were not longer than 24 or 48 hours, and throughout that period, we were in constant contact with both our partners on the ground in each country and with our customers, just in order to help maintain any, manage any exceptions to those situations. The impacts of such halts were felt in countries like Jordan, Honduras, Nepal, and the Philippines, who were actually the first country to shut down financial markets, where local banks were unable to move funds between each other. In the Philippines specifically, where the local clearing system PesoNet is among the world's most innovative for facilitating cross-border flows, due to the size of their inward remittance economy, the technology was at the mercy of fundamental shutdown of the underlying banking network. The same was the case for IPS, which is the local clearing system in Nepal, and in some cases where staff were not able to access branches to supervise the movement of those transactions between the local banks, there were some sporadic delays in settlement. Once the government restrictions were lifted, however, banks in most countries proceeded to implement work-from-home measures or reduce staff physically present in offices in order to avoid large spread of infection. And this was found to be very successful with quite a few of the partners that we've spoken with. In markets that we would have expected a bit more friction, such as Bangladesh or Pakistan, where a lot of physical documentation is still exchanged and presented in terms of claiming inward remittances from overseas, we actually didn't see too much more of a delay in those transactions being processed with our local bank partners. So in handing in a Form C or a Form R, for those of you that may be familiar with the documentation requirements locally, those things were relatively well managed and overwhelmingly not too different from our previous experience with settlements in those markets. In fact, even in markets such as India, where some of our closest partners reported a drastic turnaround time for work-from-home measures, it seems that a lot of the local banks are now implementing longer-term work-from-home controls and infrastructure that they have noticed have resulted in productivity and employees that no longer have to commute several hours to be able to go to work and perform their tasks. They're improving a bit of their quality of life and also maintaining the integrity and efficiency of the local banking systems there. And we certainly do believe that that's something that's going to be more prevalent going forward after this exercise. Next slide, please. So in terms of a summary, just to wrap up, our particular experience, and as Michael mentioned, our focus on the exotic market specifically, the resilience of the overall banking systems that make up our global infrastructure for this product have been found surprisingly strong in the face of this most recent adversity. There's been a lot of adaptation in terms of technology that has been successful, certainly a lot of lessons from partners and how to make things more efficient, and we've worked very closely with them on those initiatives. The impact to the customers has been minimal in a lot of cases, which is of course very fortunate. But one of the major things I think to keep in mind is that there's no reason to feel intimidated by the uncertainty in these markets. A lot of people think that exotic markets can be very complex and sometimes not worth dealing in. But the truth is, through all the experience that we've seen, they are actually very stable and able to support continuity in this business. It's really about having a strong partner with exposure and local access in those markets. Make sure that they're able to provide you with information so that you can guide your local office staff in those countries or your vendors or partners there with up-to-date information, which is not necessarily always available to the public locally, but that central banks and financial institutions will have access to ahead of time to provide some sort of lead time to react and to plan and to make sure that the operations can continue there. From our side, I think that efforts that we made are pretty well summed up in a functionality that's available on our portal. For those of you that are already current partners of ours, the Global Payments Network that we provide is such a portal that has updated information from our trading desk, and also including shutdowns in certain countries or temporary lockdowns, reduction of hours that can be used to manage some of these exposures that you have overseas. With that, I would like to thank you all very much again and introduce my colleague, Timothy Peng, who is our head of trading in Asia, just after this poll that you'll see here shortly in results. Okay, so having a quick look here, how has COVID-19 impacted your international project funding? So it seems majority of it has been on the FX losses side, okay, fair enough, and then delays in beneficiaries receiving funds. Very valid. I think on the FX volatility side, my colleague Timothy will speak a bit to that shortly from a more technical perspective on the markets. And then in terms of beneficiaries receiving funds, it would be very interesting to learn more about that and to see what some of those particular country examples were, if there were any in addition to the ones mentioned on today's summary from my side. I think we'll hand it over to Timothy.
Hi guys, thank you Tiago, and good afternoon everyone. My name is Timothy and I head the foreign exchange trading desk here in Singapore. In my daily work, I interact with the currency markets and with a particular focus on the APAC region, some of which you might be more familiar with, like the Papua New Guinean kina or the Indonesian rupiah, but also as far-flung as the Chilean peso or the Ugandan shilling. For my next few slides, I'll give a brief rundown on the impact that I've seen the virus has had on the regional financial markets. So let's take a brief look at how the Aussie dollar has fared since the outbreak of the coronavirus. This is the Aussie dollar versus US dollar graph for the past 6 months. I'm taking January 15th as the reference rate, because that's still considered pre-COVID-19 levels, as the first cases outside China were reported after that, about a week later on January 20th. So you can see trading at 68.90 on the day. Since then, we saw the Aussie dollar plummet to a low of 57.20 in mid-March, as fears over the economic fallout due to the virus gripped not just Australia, but the whole world. Eventually though, as you can see, the graph is slowly climbing back up, and the Aussie dollar has recovered its losses against the US dollar entirely, and then some. But what were the reasons for that? Next slide, please. So as the impact of the pandemic began to be felt in economies around the world, we saw the theme of fear playing out. Markets became increasingly irrational, with the United States S&P 500 index dropping 30% in just a month, a percentage move last seen during the subprime crisis in 2008. Currency markets took about 2 years to climb back, and US equity markets took more than 3 to climb back to pre-global financial crisis levels, whereas in the case of COVID-19, we see the Aussie dollar recovering in just 3 months. I think many market watchers, myself included, have been surprised by the speed of financial market recovery after the March drop. People were talking about a U-shaped recovery, but it increasingly looks like the V-shape is par for the course. I think the main reason for that is that worldwide, central banks and governments have been much, much quicker in getting both their fiscal and monetary policies in place and implemented. We see interest rate cuts and massive stimulus packages implemented by the Federal Reserve, health spending, cash handouts, tax relief for businesses. And indeed, this has been a commonality throughout the developing economies, the developed economies, Australia included. We have also seen coordinated central bank action between 6 central banks worldwide offering US dollar liquidity, between the Bank of Canada, Bank of England, Bank of Japan, Swiss National Bank, the ECB, and the US Federal Reserve. And these measures, you didn't see that in the global financial crisis. So this is a very quick turnaround or response time to the pandemic this time around. I think they've learned their lessons from that there. Now, these are just a few examples of the measures we've seen, but they all aim to do one thing, which is to ensure sufficient liquidity and the proper functioning of financial markets worldwide. As many of us recall being cooped up in some form of lockdown or another, the impact to the world economy was significant, and we are just beginning to see these numbers playing out in this quarter. For example, Singapore just reported a 12% shrinking of their GDP quarter on quarter. So you can see unemployment has increased, whether through outright job losses or reduced hours. Businesses were shuttered, leisure air travel and business travel ground to a halt. All these things meant money needed to be routed to these individuals or entities that need it. And the liquidity measures taken above helps achieve that. Without these measures though, economies would choke on stagnant monetary flow and economic impact on businesses, and in terms of job losses and impacts on the individual, these would be far, far worse. Next slide, please. So, but what about the impact on lesser developed economies? As many of you run projects in developing markets, you might have already seen this. In some economies, you see a shortage of hard currencies such as US dollars, pound sterling, euros, Aussie dollars due to liquidity issues. As parts of an economy freeze up due to lockdowns, exports are reduced, and there's a greater demand for these currencies versus the local currency, especially for those countries which are net oil importers. When we take a look at the currency graph for a few developing economies, it can be seen as a mixed story, as different economies have different exchange rate regimes, different deficits, different monetary and fiscal policies. If you look at the red line that indicates the Bangladeshi taka, it seems to have spiked up, but actually has remained relatively stable at the 84.90 level due to the central bank managed float system. While the white line, indicating the Philippine peso, has actually swung from a 2.5% gain to a 2.5% loss. I'm sorry, it's a 2.5% loss to a 2.5% gain. So the peso is more of an outlier. It has outperformed Asia on its fundamentals, such as strong domestic consumer demand, robust foreign worker remittances, and higher real exchange rates that encourage inflows. But elsewhere, if you look at the Malaysian ringgit, the yellow line, at its worst, a 9% drop, currently sitting on a 4.5% loss. The Indonesian rupiah in blue, 20% loss at its worst, now sitting on a 5% loss. Closer to home, you see the Bank of Papua New Guinea has controlled the fall of the kina at just a 1.5% drop under their crawling peg system, as seen in the orange line, but still a loss. So on a broad level, and even if you look further afield, We see losses in the South African rand, the Seychelles rupee, or the Angolan kwanza, Brazilian real, you name it. Almost all emerging market currencies have losses. In short, a single dollar, whether US or Aussie, fetches more emerging market currency now than before the coronavirus outbreak. This is a flight to safety spurred by a microscopic virus. Next page, please. So what does this mean for you, charities and NGOs? Firstly, with the liquidity measures I touched upon earlier, I think the biggest takeaway here would be the purchasing power of your Aussie dollar fundings. Initially, the drop versus the US dollar was 17% at its peak, which would be a heavy hit for anyone by any stretch of the imagination. But the recovery has been stark, and in fact, is stronger now since before the virus outbreak. Secondly, as Tiago mentioned during his presentation, during the first weeks of the crisis, we saw different implementations of the crisis. We saw different implementations of the country lockdowns in all the currencies we make payments into. Some saw mild impacts, such as shorter cutoff hours, others a delay of a day or two, predominantly due to movement control restrictions and reduced workforces in the banks to actually complete payment transfers. Elsewhere, just 3 countries were slightly more drastic, where they totally suspended local currency transfers. But the good news is these were just temporary, and we have recovered our full range of currency delivery, with more than 90% of our currencies delivering at full pre-COVID-19 capacities in terms of volume processing and restored cutoff timings for urgent payments. Thirdly, due to the restoration of delivery capability, many of our NGOs and aid agencies, they are able to resume just-in-time fundings as they no longer have to budget a buffer for delays due to the virus. This provides them some measure of fiscal flexibility and allows for them to hold their funds in their base currency for longer until it needs to be converted for local expenses. Next slide, please. What does the future hold? So some countries such as the US and Brazil are still combating their first wave of infections, and we don't hear much about the virus impact in Africa, although they have more than 600,000 recorded cases now. But going forward, what about the second and third wave? Perhaps it's the pessimist in me, but I fully expect a second wave to hit more than just a handful of countries. The ease of transmission of the virus points strongly towards this. And as economies begin to open up, it's inevitable we see new cases and clusters forming. This will add to market volatility, but the good thing is so far, the rise in cases in various countries don't seem to be as serious as the first wave. So we can only hope for everyone's sake that it doesn't mutate into a more virulent strain. I think most of us have heard to death the phrase, the new normal. I, for one, can't wait to be able to travel out and about again, sans mask, as it's compulsory for us here in Singapore on pain of a $300 fine. However, I think this will only really happen when a vaccine is widely available, and I think that's projected earliest 2021. With the amount of resources, though, that's being poured into the global search for a vaccine, it will happen. It's just a matter of time. And talking about the vaccine, though, that actually affects market volatility significantly, for the short term at least, in both currency and equity markets. We are seeing the same theme play out almost daily. Positive news of a vaccine boosts equity markets and risk appetite, which usually translates into gains in developing market currencies, which are deemed riskier assets. On the other end of the spectrum, if you have news of a new wave of infections, inefficacy of treatments, or shutdowns in the US, typically this leads to a fall in equity markets and risk appetite, and this translates to weakness in developing market currencies. And if you're holding on to your funding currency like Aussie dollars, this means more impact for your dollar. Next slide, please. So on that note, I've come to the end of my presentation. I hope I've provided some, at least moderately helpful information. in the meantime, everyone, let's buy the scientists some time, observe social distancing, mind your personal hygiene, and stay safe. Happy to answer any questions you might have. There's a Q&A box where you can submit your questions there. Thank you.
Tim, I don't have access to the Q&A box, but I've got a question or two if there's none others up there for you to respond to.
Sure.
I'd be interested in what do you see as some of the advantages of using a local currency for project funding?
So one of the biggest advantages is actually knowing how much comes out at the end on the beneficiary side. So a lot of feedback we've received is when somebody sends a fixed amount of US dollars or Aussie dollars, for example, they are at the mercy of their local bank who converts it at, usually the board rate or whatever rate they determine on that day itself when the funds actually arrive. That's one of the big things. Yeah, they have no transparency on how much they will be getting at the end when the funds hit the account. Second thing is a lot of it has to do with investigation turnaround time. When you send US dollars to a place like Kenya, for example, the funds have to be routed through an American bank, and then it gets to Kenya, or even with another intermediary bank in the middle. So there are more hops for the transfer to take. And something can go wrong there. We've got a wrong beneficiary account number or incorrect intermediary bank details. And that holds up the payment, right? And because there are 3 or 4 intermediaries involved in the middle, that usually means when you're trying to investigate the status of a payment, there are more delays there because you have to wait for intermediary 1 to reply, then intermediary 2 gets the response and it comes back to us finally. So turnaround time for investigations is a big thing. And I think another reason would be, another benefit to using local currency would be that we use local correspondents onshore. So any investigations, in fact, if any clearing as well, is usually faster than sending US dollar wires that go through all these different hops. Guys, if you have anything else to add, happy to answer that. Please chime in. Sorry.
Thanks.
Sure. Yeah.
I can't see any other questions up there. Is anyone out there in viewer land have any questions for our panelists? I'll ask another one while we're waiting. During this COVID-19 period that we've been going through, were there any currencies that you needed to shut down?
Yes, indeed. Well, as Tiago mentioned, it was actually temporary. So the first currency was the Philippine peso, and I was actually directly involved in that one. Essentially, the banks in Philippines told us that central bank clearing has stopped, PesoNet has stopped. You can't buy, you can't sell US dollars. You can't even transfer Philippine pesos from one family to a friend, for example. So the financial system totally stopped. And I think eventually they realized that to stop the local clearing system means monetary flow just totally stops. That means you can't pay salaries, you can't buy food at unless you have physical cash. So they realized the severe impact this has on their economy, and the very next day they switched it back on. So they still had distancing that they needed to put in place. So a lot of people were working from home. So what they did was they shifted it to, instead of the system being totally closed, they opened it for a limited number of hours. I think the cutoff time was about 11 a.m. or 12 noon for payments in the Philippines. But as the weeks have gone by, things have gotten better. They have restored some of they have extended the cutoff timings, but it is still, we're beginning to see a second wave. Actually, there's a new district in Metro Manila which has been quarantined again. Lots of people there, and we just have to hope things don't get too much worse.
I might just jump in here. I think we got a couple of questions that participants have started asking, so I might just go through these ones quickly here. And I can see one from one participant actually saying, would you say StoneX is more efficient at local currency money transfer compared to traditional brick and mortar banks? Good question. Tiago, would you like to have a go at answering that question for us?
Sure, yeah. Thanks, Michael. Yeah, that is a very good question. So in our experience, essentially, we're not actually providing anything that's too far outside of the brick and mortar banks. We still partner with those brick and mortar banks in the country. I think what makes our particular approach unique is that we work with several banks in each of the markets that we deal. We have many partners and relationships that have been built over the last 30 years with a lot of these banks. So we access, at least through the particular relationships that we've built, the most efficient ways to settle with those particular banks. That means that we're accessing local clearing systems that are near real-time settlement from bank to bank. We're looking at holding the actual local currency ourselves. We're doing the foreign exchange with those banks and maintaining balances in those currencies that are managed actively. So we can actually create more efficiency there. Whereas if you're using an international bank or a provider that's offshore, and then they're using another bank, or as Timothy mentioned, in the inefficiency of that intermediary chain, there are a lot of other players in between. You lose a lot of efficiency there. So we're actually able to use the local technology of those banks and have them credit to the beneficiaries reliably, free of any deductions or costs, which are all things that make this traditionally inefficient. And so we're able to do that for transactions of all sizes. Of course, in certain markets, there are regulations to what can and cannot be done. We have extensive library of information that can guide in those particular situations. But that's the main edge, I think, is that we really focus on that relationship with the local bank, with the central bank. And we take the time, because that's pretty much what we spend all of our time cultivating, is that access to efficiently, get the funds on shore, trade the foreign exchange through the regulated means, and ensure that the disbursement is done at the most cost-effective and timely manner possible. And again, that's why we would work with normally between 3 to 5 banks in each country, as opposed to your traditional, brick and mortar network, which may have one main partner, or they work with a large international partner that then leverages another partner to get into the country, because they don't see it worth their time in terms of the risk and absorbing the costs of the compliance and due diligence required to maintain those types of relationships. That's what I would say makes our service particularly efficient, is the time that we've done it, and then the emphasis put on those local relationships to add the most value.
Thanks for that, Tiago. And I think we got another question here as well. I hope that answered the question for the panelists, the attendee there. But the next one here, probably one for you, Tim. We've got a question regarding, do you have any knowledge views on the banking system in Timor-Leste, or formerly known Timor East, or East Timor?
Thank you for that. Timor-Leste is a little bit unique. A lot of it is dollar-driven, and to a secondary level, from what I understand, is Indonesian rupiah driven. So we do not have direct banking partners in Timor-Leste. That's one of the regions that we do not currently deliver to. So unfortunately, we do not have any direct knowledge of that jurisdiction. But we're happy to explore more and discuss, because a lot of times some of these currencies are actually developed upon request from our customers. So we're happy to have that discussion with you, whoever. I think we can see Miss Alison Brown asked that, so we can certainly discuss that later.
Excellent. Thank you for that, Tim, and we'll follow up on that. I think we've actually got a very good question asked here by Nikki, actually. which is quite, I think, relevant here. So given that StoneX does not offer hedging, and that is correct, it is purely a spot FX delivery product that we provide, what strategies can we suggest to manage ongoing FX volatility associated with the COVID-19 context? Tiago, would you like to have a go at providing some answers to that?
Sure. Thank you for that. So, yeah, as Michael mentioned, the focus of the product as it stands is really on efficient delivery of the spot FX for a number of reasons, I guess. It's a very payments-driven, particular transaction-based service and solution that we're providing. But as Timothy mentioned as well during his piece, you're always going to have that volatility that goes between your funding currency and the destination, market that you actually need to get that funding in. As we don't directly provide that hedging solution by way of forwards, non-deliverable forwards for certain markets, or even deliverable forwards for some countries where you may be able to access things up to a limited tenor, it's difficult to exactly hedge every piece of exposure. There will always be currencies that you're getting funding from, like the majors, things like euro or British pounds, Australian dollars against the US dollar that you can hedge. We find that what's helped a lot of our customers in a sense is to be able to manage the cash a little bit more efficiently. Whereas customers were previously doing one bulk funding to a project office in a particular country at the beginning of every month, they were subject to that single bank's rate on shore, and then relying on that balance throughout the fluctuation of that particular volatility throughout the course of those 30 days. Some customers have, as a result, done more just-in-time type of funding, where the local office will provide an invoice or request operational funding based on that monthly budget, more in real time and as the needs kind of arise, so that they're not doing the FX at any single point in time and subject to just that. They can sort of average in to whatever the rate movements are using spot transactions throughout that time. Other things that have been proven more efficient, of course, is if you're dealing with a vendor, a third-party vendor, making sure that they are invoicing you in the local currency. That eliminates volatility on their side and also allows you to manage your cash up front a little bit better, as Timothy mentioned, to know exactly what it's going to cost you before you send those funds overseas. Whereas, if you're just sending a dollar wire, the vendor that you're paying, perhaps their costs that will later be in the local currency may not be fully covered by the US dollar amount or the Australian dollar amount that you sent. So you're set in a situation where you have to send another wire, or you've paid them too much and now they've got an accounting mismatch on their side. So in terms of those particular risks and fluctuation, this is how some of our customers have addressed that, is trying to switch over to local currency where they can and do more frequent fundings. Obviously there are costs to doing FX more often. There are wire transfer fees associated with those payments. And these are things that we've worked with our customers to address, to build a portfolio for them with a solution that makes sense of those things. As we don't currently charge any fees for the service, we help manage some of those risks and allow them to account for that volatility up front. Regrettably, long-term projects where you've got a year contract at this stage where you're getting funding up front and you've got to disperse those funds and you're worried about the end value of your funding currency, that's not something that we're dealing with directly at this stage. But we have seen customers that will use our service in parallel to a bank relationship that may offer forwards in those markets. One of the most important things that you can do in a situation is speak to a bank that is offering that forward. Let's say if they, for some reason, have access to a forward market in Ghana or Kenya for 3 months forwards, and you want to lock in your exposure there, be sure that they have enough liquidity there that they can guide you as to what regulations are in those countries for those products, because they tend to be a little bit more complicated or a little bit less transparent than a regular spot FX settlement. So if you are going to consume that product of a more exotic currency forward, which there are not many of, ask as many questions as possible so that you understand what it's like if you need to repatriate something at any particular point and get the funds out of the country, who that bank is actually settling those funds with. And of course, benchmarking on the pricing. Because they're not very transparent markets like spot FX, you want to manage that risk to know how you'll be able to price your forward in a more exotic currency of that sort.
Great, thanks, Tiago. I hope that answered the question. I do appreciate people putting us on the spot. That was a good one. I think that's probably all the questions we had.
I think we have
there.
one more, right? About the fee structure.
Oh, Mark?
I was just wondering if I could pop one more in there, if I've got the opportunity to do that, or did you want to address the fee structure question?
No, that's right. Oh, there was a quick question from one of the attendees as well, asking about our fee structure. So just quickly, so all our costs are incorporated into the exchange rate we quote you. There's no transaction fees, no setup fees, no ongoing fees, no minimum monthly uses of any kind. So it's just the rate, and that's it. And that's sort of the simple model we like to operate on. So that was the question. So I hope that answered the question.
Pay as you use, yeah.
I think, that's the list there. But I think, Mark, you're going to ask one more, right? Yeah,
if that's all right. So what sort of issues have you observed through your client base through this period, for example, trading activities?
Yeah, no, I think that's a really good question, because obviously, everyone in this involved here has been impacted in some shape or form, and we all have a very good understanding of how we have each been impacted. But we don't necessarily might have an understanding of how other people have been impacted. Are the impacts on my organization the same as what other organizations are going through? And I guess we're in that unique position of being able to talk to many different clients and NGOs about what we've seen. So interestingly enough, so trading volumes in terms of like payments that we've processed over this period have not significantly dropped off at all. And I think that sort of tips the hat back to sort of what Timothy was alluding to about government stimulus being injected to keep the economy ticking along. Now, originally, a lot of the clients, particularly in the Australia region, we sort of saw this initial halt that occurred. A lot of our clients sort of, all right, let's take a pause, let's assess what the impact is on us, on our officers and our field officers. And we sort of saw this sort of quiet period where people were just sort of pausing to assess, what does this mean for us? Now, during that period, I actually, I remembered watching another webinar speaking to lessons learned from the GFC. And interestingly enough, just because of the way that NGOs are heavily capitalized and cash intensive, they tend to weather the storm much better. So, and that's what we're sort of seeing now. We're sort of seeing that return to normality as markets are opening up again, countries, lockdowns are being eased, normal activities are being resumed. And in fact, there's actually been a spike in activity because of all the, I guess, the COVID programs that people are now running. This is really front and center in people's minds. But I don't know if perhaps Tiago, you had anything, or Tim, you wanted to have a comment about trading volumes, activity that we've sort of seen over this period as well?
No, actually, you said it right. We haven't seen a significant reduction in volumes or in terms of number of payments or in absolute notionals. So it's still business as usual, but I think the impact you will see just like the quarterly numbers that are beginning to come out, you'll see probably a reduction for this quarter going forward. I think, especially as it takes a while before you see the economy impact from all the closures. So I think we'll probably see a little bit of a slowdown for this quarter going up. Great.
Thanks for that. So yeah, hopefully that sort of gives people some knowledge and insights. I'm always happy to share that afterwards. I think we've got one more question, actually. I think we've got time to answer as well. So let's take a look here. Have you seen any unusual or increased sanctions put on any particular currency or countries over this period? How to deal with that kind of restriction in making transfers? Maybe Tiago, do you want to have a go at that one, or Tim maybe?
Sure, I can start off. So on a country basis, there's no new restrictions due to, or in particular due to the coronavirus. It's still very much compliance-based queries that we see on a day-to-day or every other day basis. If a particular payment is comes from person A and is going to person B, the bank might flag something because it is there's a similarity in the name on a certain OFAC screening list, or it could be they don't know what the reason for the transfer is because the purpose of payment is vague and it just says invoice. So in these cases, where our banks, whether it's in Mongolia or in India or in Papua New Guinea, they will reach out to us and say that, can you please clarify certain information? Maybe they want a date of birth on a beneficiary, or can you establish the relationship between the remitter and the receiver? Or could you provide a more detailed purpose of payment? So once we provide that to them, we reach out to the remitter, the client. We ask them for the information and we provide it to our correspondent onshore. Usually they'll look at it and most of the time these are false hits anyway. It's just because the name is similar in some form or another to a bad person, for example. They will usually just send the payment through. So it's not because of the virus that we are seeing more of these. It's a regular AML counter financing of terrorism screening that our guys do. We perform that, and our correspondents perform that, so it can be stopped on any side.
Yeah, if I can add quickly to that, thanks, Tim. One of the things I guess that we mentioned earlier as well is having direct relationships with the banks in all of these destination countries. So when there are questions, these lists that are being screened for OFAC sanctions and several other lists that our technology runs our transactions against, for example, we'll see that they update every day. Some of them several times per day to account for changes. And so in a lot of those markets, we're able to address those pretty quickly and get the information from our customers to address them as quickly as possible, as opposed to having several people in between that communication chain. And again, that's all part of making that more efficient as a part of our service. In terms of the increased sanctions, yes, Timothy mentioned, we haven't seen any governments really step in. I think a lot of governments will be trying to facilitate flow of funds, not by reducing their controls for anti-money laundering, but to certainly make sure that the players are stepping up to make sure that false flags are treated appropriately and timely, and facilitate the flow of funds between countries.
So yeah, if your particular payment, to answer the question more succinctly, if your particular payment fails or is stopped for any of these sanctions checks, just answer the question as best you can, provide as much color as possible, and usually these go through. So, and if it does not, then they will normally tell us why.
Well, thank you. On that note, I think that brings us to the end of our webinar. I'd like to thank the presenters from StoneX. Thank you to Tiago, Michael, and Tim. If you'd like to get in touch with any of the presenters, their contact details are now currently on your screens. A reminder, if you do not wish your contact details to be shared, please get in contact with the ACFID Secretariat immediately following this session. At the close of this webinar, you will be automatically directed to a feedback survey designed to help us build future learning events. So feel free to provide topic suggestions and other feedback. Please stay online as we'll now pass you through to the survey. Thank you all for joining ACFID and StoneX for the webinar, Managing Overseas Project Payments in a COVID-19 World. So stay safe and see you next time. Ciao.
Thank you.